Good morning, folks. Welcome back to the Guardian Morning Call. And we're talking a little bit about oil this morning. We're talking a little bit about some of the madness we've seen in crypto over the past couple of weeks. I'm actually super excited to get into that because we don't spend too much time talking about crypto on the channel. I think it's high correlation with sort of the allocation beliefs regarding, how much crypto people should own or where or what kind of digital assets people should own. It's certainly not kind of the main part of the portfolio. And then last but not least, we'll get into some of the even, believe it or not, even fringier stuff with the superconductor news story with the UAPs. I know I've already touched on it, but I'm back with some more detail, some more layers to this, and I'll share, of course, some of the base articles and stuff that I'm using. Actually, if you're in the Discord, I've shared a video by Muda, who's kind of a commentary persona on YouTube who talks a lot about technology, a lot about gaming, and some speculative kind of fringy stuff as well. But he always does such a good job of backing up with documentation, sharing the documentation with the community, having like very rational sort of channels of thought. So, shout out to him. Go on the Discord and check out that video as a nice primer. Alternatively, Bloomberg also put out a really good article on that. But let's kick it off with what's going on in the oil market, what's going on with OPEC, why is it important for us to keep tabs on this? And so OPEC recently announced that it's going to actually make an oil production cut of $1 million per day in the near future. They're going to begin this. This is putting a strain on oil prices. Actually, if we go, let me just swap out my screen here. So if we take a look at this chart here, let me get it more centered for you guys. This is the US oil chart. It's one way to kind of look at oil prices, especially from kind of the US perspective. And you see that there was this kind of massive dip in the past couple of days, a spike aggressively back up after OPEC announces cuts. What does this do? So energy prices, which are predominantly driven by oil costs, gasoline prices, etc., make up about 7% or more of CPI, which is the way that the government measures inflation and the way that we try to understand what our cost of living is. So it's a pretty large component of the inflation picture. What is the main sort of focus of both markets, the Federal Reserve, and individual investors these days? Inflation. Is inflation going to go away? Is the Fed going to cut rates to make for a more amenable growth environment? Are prices going to go down? Are wages going to go down? How is this all going to play out, right? And the market has soared. Actually, let's take a quick peek at the NASDAQ while we have our trading view open. So if we take a look at the NASDAQ, I don't know why it's not showing me the performance anymore. Let's see. Oh, because we're not at the stupid homepage area. Huh. Well, the point is the Nasdaq's up like 40% this year. So it's been a gangbusters year for technology. And what slows down technology are rising interest rates, slowdown of the economy, higher cost of borrowing. So OPEC cutting production keeps prices high. And that's one of the main pieces of this puzzle. Is Jerome Powell, head of the Federal Reserve, going to raise rates in September? Or is he going to pause? Or is he going to cut? How are we going to have our porridge? Is it going to be too hot, too cold, or just right? And with oil prices high, it kind of helps but hurts. Let's pair it with the jobs report that came in this morning. I won't bore you with the numbers, but in reality, it came in a little bit soft. Fewer jobs than expected added to the economy, but wage growth came in above expectations. More inflation, you see that wages going up. So cost of labor is going up for businesses. Good for individuals, but fewer individuals. So you see energy prices staying high, wage growth staying high. Maybe our porridge is starting to get a little bit hot in the inflation scene. So that's always why it's important to watch oil prices. It's part of kind of the dark triad of things, slow moving, big picture things that really affect the markets, right? Interest rate, oil prices. And then you can kind of say dollar, even though it's correlated to those two very closely. or has a close relationship with those other factors, but kind of other macro factors involved there. So next thing I wanted to jump into is the CFTC conversation, Richard Hart, SEC, what's going on in crypto, right? And one of the latest and greatest stories in the blockchain digital asset space is a crypto influencer slash creator of coins and ecosystems and layer twos and creating, I guess, a layer one now. For those of you that are in the out of the kiddie pool with the crypto stuff, Richard Hart, he's notorious for being this sort of magnanimous creator and champion of decentralized finance and decentralized sort of asset ownership and community by creating this cryptocurrency called Hex. And I know several people who are Hexicans, as they say, and diehards and believed in it and whatever. But I always found it one of the most peculiar projects out there because of Richard Hart and his personality. So he's just very confident. He is very intelligent, has a fairly strong understanding of the global financial system and central banking and things such as that. But in reality, it was always kind of concerning. And here I'm showing you guys my Discord, but it was always kind of concerning his extravagance. To an extent, it backed up his convictions and whatnot, but he was always out buying Louis Vuitton and Hermes stuff and then going live on YouTube with, glowing Louis Vuitton bags in the background. And he had bought some sort of extremely expensive and rare diamond. So now the Securities and Exchange Commission, goes after him. I'm surprised that the Securities and Exchange Commission didn't go after him way, way, way sooner, given sort of the scale of how much money he was making and bringing in, and the volatility of Hex and sort of the cult of personality built around the cryptocurrency. So that has been sort of the next wave of regulators here in the US going after a lot of these crypto companies, these blockchain services, but now also actual, ecosystems directly, if they assess that, this is an illegal sale of securities and it's based upon basically nothing other than the lesser fool, right? How much can I convince the next buyer to pay for this thing? So the Richard Hart story, super interesting. They have a documentary coming out. And, some of the feedback I've gotten from folks who are still committed to the project is that, hey, this is the best sort of PR that we've gotten in a long time. It's only going to strengthen the project. I'm eager to watch the documentary about him. I forget what it's called. I think it's like The Biggest Risk, or I'll figure it out and I'll send it through on the Discord. But excited to watch it because it's just so many questions and so much suspicion and weird vibes surrounding that. Second, in that world, two more things, I guess. CFTC's, oh no, that's a typo. CBD, central bank digital currencies. And I totally typoed that up too in the Discord. But the central bank trying to have a digital dollar, right? Like a blockchain dollar. There's been a lot of back and forth about it. A lot of people in the blockchain digital asset world are against it because it gives the government, a lot of control and oversight on money movement, much more so than the current banking system, which is like slow. And I kid you not, like a bank literally sends a letter to another bank to say, hey, we're sending you money. Do you agree? Yes. And then they send a letter back by like horse and buggy. That's how it works today, but your accounts are private. So the government can monitor certain things and ask questions, but ultimately, if they want to get to the source of everything and all of your information, they need an excuse, at least, a warrant, a command from some agency, etc. If all of our dollars are moving on the blockchain, everyone has insight into your wallet, your money movements, and the government, if they run it, from sort of a centralized hub, or have more intelligence on how the blockchain ecosystem functions in their own, central bank digital currency world, they'll have God mode on money. So there's a lot of pushback around that. Other nations already have it, including China, who's banned crypto. So we'll see how that plays out. I think it has a lot of positives potentially for the greater sort of community. It could make, you know, access easier, lending easier. It's a variety of things, but then it does simply give the government more oversight and control. So take that and do what you will with it, whether you're against it or for it. I'm just here to watch and and try to protect or make some money. And then last but not least, Coinbase, they reported earnings uh, this week and basically came in with less loss than expected, more revenue than expected. It seems that there's still an ecosystem there, there's still a community there. People are buying Bitcoin in particular, Ethereum as well. And while there was a little bit of an altcoin season in the last few months, but Coinbase is going to Coinbase. We'll continue to monitor the crypto situation periodically because we need to see some actual value add. We need to see some actual, uh, you know, additional value baked into whether it's the consumer experience, whether it's the Web3 experience. I think that's what the market's waiting for. But we are seeing prices hold relatively strong. Bitcoin trading around 30,000. Last but not least, superconductors and UAPs. Just two comments. The superconductor thing, I mentioned it. Great article on Bloomberg about it. Great video I sent through the Discord by Mudahar. Um, and then the UAP situation, I just watched the congressional hearings last night. Guys from one agency or part of the Navy talking to Congress about foreign things flying around and biologics and all sorts of surreal things that borderline uh, I'm almost like disassociating watching the congressional hearing because I can't determine whether it's a movie or whether it's reality. Just wanted to kind of share my initial reactions there. So reaction video, and then I'll give the reason again why I'm wearing the bearish hat again. And pretty much at this point, I've worn it 2 or 3 times in the past week. Basically, that's how I'm feeling about this market. Like I mentioned, the Nasdaq is overheated. It's, up almost 40% for the year. Inflation seems to be sticking around, coming back in the form of energy, wages continuing to grow. So prices are sticking around. And then the earnings was mixed. Apple came in. Apple's always a leader. They're not a lagger. Apple came in indicating that they think that there's going to be fewer sales going forward. They are one of the largest positions in the indices. So if Apple thinks that there's an economic slowdown coming, there's kind of an economic slowdown coming. On the other hand, Amazon, is going to Amazon, and they reported a lot of strength, but a lot of it stemming from cost cutting and stuff like that. So I'm feeling a little bit kind of like maybe it's a moment to raise some cash. Maybe it's a moment to take some of the chips off the table for this year, especially with a gangbusters year of a 30-40% NASDAQ. I mean, that's not normal, guys. When you invest in equities, if you are properly diversified, you can anticipate, a 10% gain per year. Under normal economic conditions. To see a 40% bounce back from a drawdown from last year is insane. And I'm sure there are a lot of institutional fund managers who are thinking the same thing, like maybe I just pocket this return for the year and be very, very, very careful for the remainder of the year. There's also kind of here is a sentiment thing, right? When you look at some of the Wall Street strategists who've gotten the previous cycles wrong, and then they change their minds going into kind of a new one, um, it's also a point of concern. And I'll talk a little bit about, I'm going too long, but it is Friday. Um, Talking a little bit about Mike Wilson, who's the head strategist for Morgan Stanley, and he has gotten most of this year wrong, being particularly bearish, not doubling down on technology here in the U.S. And he's a strategist I really admire and has gotten most things right, especially through sort of pandemic and whatnot. But now he's shifting to a more bullish sentiment as this market, in my opinion, may be beginning to sort of putter out, given kind of the global background and inflation not necessarily cooling in the way that the market believes it is. So getting a little bit bearish, thinking about maybe raising some cash. On the other hand, we're happy to see some of the other themes in the model portfolio that weighed on it in the first half of the year start to play out. Notably, energy, right? We're seeing energy prices go back up. That's great for our diversified energy companies. Seeing moving and shaking in material science with the superconductors thing, that a company like ExxonMobil is already on top of that. And then last but not least, our Asia skew. So in the portfolio, we definitely have kind of an Asia bias where we're allocating towards companies in Japan, we're allocating towards companies in South Korea, we're kind of ex-China, and we just have a thesis there of like cultural export, so media, consumer, that type of thing, as well as high tech and manufacturing. And there's certainly, a narrative there developing between Japan and South Korea, especially with the superconductor story, where the core of all of this is in South Korea. But we will continue to monitor that, guys. We'll catch up next Monday. Remember, every Monday, Wednesday, Friday, we jump on this morning call live for you guys at 9, 9:30 sometimes, but usually 9 a.m. We try to beat the markets. Take care, guys.